Welcome back on this channel. In this video, I'll show you how to use Bybit, the crypto exchange I personally trade on. We'll go over how safe the platform is, what leverage trading means, and some tips I use for trading at the end of the video. This video is mainly for beginners, but pros might find it useful too. Just to be clear, I'm not being paid for this video. The only way I might earn is through my affiliate link below. By using it, you can get a bonus up to $30,000, sometimes save on fees if there is a promotion, access to giveaways throughout the year like the new iPhone and more. My aim is to keep this channel ad-free with no paid content or promotion for specific coins or projects. So if you would like to support that, feel free to sign up through the link to enjoy these bonuses. It's a win-win situation. You get the benefits and I receive a small percentage of the trading fee, which would anyway otherwise go to the exchange, but it's entirely up to you and entirely optional. Now let's dive into the registration process. Just in case you never heard about Bybit, Bybit is not just any exchange, it's the second largest exchange in the world right after Binance. Even it's front-running Coinbase. First of all, let's talk about fund safety on Bybit. After the FTX crash, transparency is more important than ever. Bybit maintains a 101 reserve for all user assets, meaning your funds are fully backed 101. Bybit uses a system called Merkle Tree, allowing you to verify your assets. So after registration, if you want to double check on this, you just go on the section Proof of Reserves and click on View My Audit Data or View the Bybit Reserve Ratio. This ensures fully transparency and security. However, never ever keep your coins on an exchange. Just move it to a cold wallet. I will explain you later in this video what is a cold wallet. Let's start with the registration process. As mentioned, feel free to use the link in the description or in the pinned comment. By using it, you're not only supporting the channel, but you also receive this exclusive benefits. As mentioned before, sign-up bonus up to $30,000, zero fees on limit orders for 30 days on perpetual contracts. This is exactly the leverage trading, what I will explain later in this video. And you get a free $100 position. What you have just to pay attention for is that you have the referral code 25551. You put just your email address, your password, and click on Get My Welcome Gifts. You can also make registration through your mobile number. After clicking on Get My Welcome Gifts, you have to slide to complete this puzzle. Pretty easy, 96% better as all the other users. You get a code on your email address. You receive this code on your email. You just copy it and put it and paste it. So after you paste the security code, which you got on your email, you can enjoy your $50 welcome bonus reward. You just click on Claim Now, scroll down, and then you see the first $20 you get for completing identity verification level number 1. I will explain you in a second. The next $10 you get if you deposit $100. I mean, if you want to trade, it will be not a big deal. And the next $20 you get if you deposit $100 and trade $10. So, I mean, we are here for trading, so trading $10 is not a big deal. First, we start with complete identity verification level number 1. You just have to click on Verify Now. It's literally minutes, and you have to do it in order to use all the Bybit features. By the way, if you want to change the language, you just have to click on this world symbol, and then you choose the language which you prefer. So, first step is proof of identity. It's only literally minutes. You have to upload a copy of your ID or driver license or passport along with a selfie that clearly shows your face to confirm your identity. Once your proof of identity is verified, the identity assessment will automatically begin to finalize the process. It's literally, like I said, minutes. After these steps, you will have access to all the features Bybit has to offer. By the way, if you already have a Bybit account but didn't receive any bonuses because you didn't use my referral code, no panic. You can simply create a new account through my link and use your driver license instead of your ID for verification. This way you will be able to access all the exclusive benefits which I showed you before offered through my referral link. Just follow the usual steps which I just showed you and make sure to use my link to unlock these exclusive benefits. Let's speak about the next step to deposit cryptos on your Bybit account. It's very easy. After the verification is done, you just click on this icon and you click on deposit. Then you can choose which crypto asset you want to deposit. Fiat like crypto, euro, dollar, you can just deposit on a Binance or Kraken account and buy there, for example, USDT or Bitcoin and Ethereum, and then just transfer to your Bybit account. You just select the crypto which you want to transfer, for example, USDT. Now you have to choose a chain through where your USDT will send. There's, for example, ERC20, TRC20, Arbitrum1, Solana, and so on and so on. There are different different chains. It's very important that you choose the right one so you're not ending up losing your money. Each network handles transactions separately. The only important part is here, choose the same chain that's used by the platform you're sending from or to. For example, if you're sending your USDT by TRC20, then you have here to choose also TRC20. TRC20 is the Tron network, is usually cheaper and is a good choice for sending USDT if you want to save on fees. For example, we have another one, it's ERC20. It's the Ethereum network, often has higher fees, so it can be more costly to send through ERC20. If you're not sure, TRC20 is a safe choice for lower fees. Just important, make sure the other platform also supports it. I'm personally always using TRC20, so we click TRC20 and then you have to acknowledge again that the other platform is also using TRC20 where you're sending USDT from. You just acknowledge, as soon as you click on it, your TRC20 USDT address will be generated, which you can copy paste to send your USDT from the other exchange to Bybit. As soon to check when your USDT is arriving, you click again on this icon, Assets Overview, and then you will see your USDT in My Assets in the funding section. And again, for your explanation, because when I started with trading, I also didn't understood this. You cannot transfer from your bank account money to Bybit. You have to use, for example, Binance or Kraken to transfer from your bank account to the exchange money like euro, dollar, and so on. And you can buy with your fiat money, you can buy then USDT on Binance or on Kraken and then send the cryptos to Bybit as explained seconds before. And same vice versa. So for example, if you made profits through trading on Bybit, you just click on withdraw and choose what you want to withdraw, which coin, USDT, Bitcoin, Ethereum, whatever. Then you can send it to Binance or Kraken or whatever, sell there into fiat like euro, dollars, and transfer the fiat money back to your bank account. But there's a massive advantage which Bybit has. If you scroll down, Bybit has the Bybit card. It's a normal credit card. You just click there. You can order this debit card and then you can just use it. You can use your cryptos, so you will have like your USDT or Bitcoin or whatever in your assets, and you can use this credit card just easy for paying your groceries or for your TV or whatever you want to pay with it using your cryptos. This is a huge advantage of Bybit. Just click on get your card and then you get within several days your card to your home, but you don't need even the physical one because the digital one will be in your profile within several days. Just again for your understanding. So if you have, for example, Bitcoin or USDT in your assets on Bybit and you live in a country where you pay with euros, you pay, for example, for coffee €2. In the background, they will automatically convert your USDT or your Bitcoin into euros and you can just pay easily with this Bybit card with your cryptos. I'm using it myself. It's really amazing. And for example, if you don't want that your Bitcoin will convert it into euros in the background while you're paying this €2, you can just choose in the settings. I can make a separate video on it. You can just choose in the settings that the Bybit card with which you're paying your coffee is using only, for example, USDT for your coffee and not your other cryptos like Bitcoin, Solana, or whatever you have in your assets. So you choose which assets are getting converted into your local currency when you pay for your coffee. Another amazing feature is if you live in a country where you have to pay taxes on your cryptos or when you trade cryptos, greetings to Germany, you can just go down, click on Tax API, and I explain you right now how easily you can create a tax report. So what you have to do, you create a Tax API API means just when you trade in cryptos back and forth, in the background, they will take all this information, Bybit will take all this information, collect it, and send to a partner, which you choose Coinly or Cryptact, where you can just copy-paste your text API inside, and then you can create the text report in matter of minutes. This is genius. So what you will find here, there are different options how to secure your account. For example, there's passkeys, email authentication, which is automatically connected if you made registration with your email. If you made through your mobile phone, then your mobile phone, SMS authentication. And then you have another very important security factor is the Google two-factor authentication. I would suggest you do all of this so you have a security level which is high. It will be here green. And what I also suggest, if you want to trade on your mobile phone, you just click on this icon and then you can scan the QR code and you get straight to your Google Store, App Store to download the Bybit app on your mobile phone. Now let's speak about the general interface of this exchange. It could be a little bit overwhelming if you never used the exchange before, but basically what we need only the trade section. This is exactly where you find all the cryptos in spot trading and in futures trading. I explain also the difference between them. We have here the tools section where you can choose, for example, copy trading or trading bot. I would not suggest to do this because it's highly risky. Then we have the finance section where you have, for example, the earn section where you can earn on your cryptos, but usually the percentage are so low, so it's not worth it. Another tab is the more section. Here is only the interesting part is the rewards hub. This is exactly where you can claim the bonuses which you get through my affiliate link. But as I said, for now, the most important part which you only need is where you can buy and sell your cryptos on spot or futures. Now I explain the difference between spot and futures trading. So first of all, spot trading, you just click on spot, and this is exactly where you can buy the real Bitcoin, the real Ethereum. You just go on the right section, you choose how many Bitcoin you want to buy. For example, you want to buy for 1000 USDT your Bitcoin or exchange 1000 USDT against Bitcoin. You click buy Bitcoin and then you will find your Bitcoin in your assets as showed before. Also, you can choose here exactly between Bitcoin, Ethereum, Pepe, and so on and so on. You can just type in here which coin you want to buy. For example, Pepe, you click on it and you can buy or sell Pepe, Bitcoin, and so on. Here in this section you buy it, in this section you sell it. As a quick note, if you don't understand anything, you can just go back and forth in this video, and if you still don't understand it, just write down below a comment and I will do a separate video on this topic. So now let's speak about futures trading. Future trading, instead of buying the actual coin, like on spot trading, you're making a contract to buy or sell it at a set price in the future. You don't own the coin itself, you're just betting on whether its price will go up or down. And the beautiful and the dangerous part of future trading is it lets you use leverage. What's leverage exactly? I will explain in a second. Leverage means you can trade with more money than you have, but exactly this also increases your risk. In short, spot trading is straightforward, you own the coin. Futures trading is more like a bet on the price and can be riskier because of leverage. I will show you exactly right now. For your information, if you want to trade future trading, it's important that you move your assets from your funding account to your futures account. How you do it? You again go on this icon, you click on Assets Overview, then you go to the right section where you see deposit, withdraw, and transfer. And transfer, it's exactly what we need if you want to trade futures. You click on transfer and then you transfer from your funding account. This is exactly the section where you get your USDT or Bitcoin or whatever you're sending to Bybit. It will always first deposit it on your funding section. Then you can transfer it from your funding section to your futures account, your USDT, and then you can trade futures. And the same goes if you made profits in your futures account. You just choose this arrows and then you can go from your futures account and transfer the USDT or whatever you traded back to your funding account just by using it all, or you choose how much or which amount you want to transfer from your futures account to your funding account. So you click on futures. Here it's exactly the same like on spot. You choose the coin which you want to trade. For example, let's say it's Bitcoin. And here on the right section, you can choose which leverage you want. For example, 10x is extremely dangerous because it means if you put $100 in, you multiply it by 10. So it means you're not trading with $100, but you're trading with $1,000. It's amazing, right? But the danger here is if the price of Bitcoin, for example, if you would enter right now here exactly at 91,300, for example, with 10x leverage, it means if the price drops by 10%, you will get liquidated and lose all your money. So it means, for example, here in this example, if the price drops, for example, by 10%, you would get liquidated at $82,000. First of all, it means if you put $100, it will be worth multiplied by 5, $500. But you get liquidated not if the price falls by 10%, but if the price falls by 25%. So the lower the leverage, the less risk. Still there is risk because even if you use 2x leverage, you doubled your money. You trade now not with $100 but with $200. But if the price decreased by 50%, you also get liquidated and lose all your money. This is what not can happen with spot trading. But also on spot trading, you cannot leverage your money. It's extremely dangerous, but if you know how to use leverage trading, you can literally leverage your position. So you can take your money, like take a loan out, double your money on 2x leverage or 5x your money on 5x leverage and use more money for trading, what is still also much more dangerous. What is important here, always use isolated because there's an option where you can use cross margin or portfolio margin. It's extremely dangerous because cross margin use all the money which you have in your future trading account for margin. Always use isolated margin because this is the calculated risk which you go in. Another nice feature is if you don't want to search for your coin which you are very often trading, you can just click on this star. For example, we are trading often Bitcoin and we are trading often Ethereum, and then you saved these coins at your favorite section, which is here. You just click on your favorite section, just click on spot if you want to buy them on spot, and then you see your coins in the favorite section. Also, you can either choose between spot and leverage trading, perpetual trading here, or you can choose, as I showed you before, in the trade section between futures and spot trading. Here where you have, for example, the Bitcoin chart and the Bitcoin price action, this is also what you see in my videos when I'm drawing the lines. Here you can choose, for example, if you want to draw a support or resistance line, for example, you choose here this trend line and then you can put it wherever you want. And also here delete it, for example, or choose the color which you want. Very easy. Also here you can above choose the time frame. For example, we are right now on the 15-minute time frame, or you can choose the 1 hourly time frame, 4 hourly time frame, daily time frame, weekly time frame. What it means basically, if we're on the weekly time frame, every candle represents 1 week. If we are on the daily time frame, every candle represents 1 day. If we are on the 1 minute time frame, every candle represents 1 minute. So every minute will be a candle closed in green or red. If it's in a red, it means the price is going down, like you see right now. If the candle is closing green, it means the price closed above, and it means the price went up. Important here, for example, if you're choosing to trade, let's say pepper, you put in pepper, and don't be confused because you have here several peppers. For example, perpetual, this is the leverage trading where you can leverage the position. Spot position, this is the actual pepper coin which you can buy. And you see we have here 3 pepper coins. These are actually not 3 pepper coins, but this is what against your trading pepper. For example, if you want to buy pepper with USDT, what is the most usual way? You click pepper versus USDT. If you want to buy it with USDC, then you can click pepper versus USDC. Then you buy pepper with USDC. It's another stable coin, but usually everyone uses USDT. Here you can buy also pepper with euro, so with fiat. If you put euro in your account through For example, if you go here on the buy crypto, and here you can buy it, for example, within seconds with your credit card, what I wouldn't suggest because the fees are extremely high. Better to do a bank transfer to your Binance or Kraken account, buy their USDT and send it to Bybit. I just transferred 500 USDT on my account. You see it's right now showing in euro 472, but if I go to assets, you see it's 500 USDT actually. And right now, in order to do future trading, as explained before, I have to transfer into my futures account. So first of all, I choose the funding account and I transfer to Unified Trading. So it's the futures account. I transfer all my 500 USDT to my futures account. Also, as shown before, we go on trade, we go on futures trading. Here we see exactly the USDT, the 500 USDT, which we transferred 500. And right now, let's just jump in the market. I want to show you this. I didn't do any technical analysis, so we will go on market order. So we will buy the price, which is exactly right now. We will not use limit order because it would take time. We have to choose at which price we want to go in the market. So we'll just jump in the market. We are moving this slide to 100. So we are jumping in, or with 99, let's make it a little bit more. So we have $108 multiplied by 10, so it's worth $1,000. We just click on buy, and we see here right now where's our estimate liquidation price. It's exactly $1,000 below the market price, which we are jumping in this trade. So we are confirming, but here I can explain you also, the quantity is 0.012 Bitcoin. It's the 1000 USDT converted into Bitcoin, the worth. The order costs are 109 USDT. This is what we are paying initially, and it's worth, the order value is 1079. So it's $109 multiplied by the 10x leverage. It's worth $1000. But if we will see a drop of 10%, we will get liquidated at $81,000. We use 10x leverage isolated. Very important. Always use isolated. We click confirm. And now we see here your entire order has been fulfilled. And here we see we are right now in a long position. And we are switching right now to the 1 minute chart. So you see it very quickly going up and down. And I explain you here why the price is moving up and down. Different strategies which people using. So here, first of all, here you see right now we are 78 cents in a loss. We have here the realized P&L is 59 cents. It means the realized P&L is the realized profit and loss. So we are right now 0.59 in a loss. This is what realized already. 59 cents, it's only the trading fee, so don't worry about it. Here you see the unrealized profit and loss, and we are right now $1.18 in a loss because we jumped in the market. You see it here. We jumped in the market at $89,874. This is our entry position, and the market price is right now $89,850. So slightly, as you see it here, if I'm zooming in, slightly below our entry. Right now it's pumping a little bit, so it's going up, the price moving to the upside, and right now we should see here green. Yeah, we are right now in profit. So if the price is going further up, we will be with our $1,000 value in profits. If it will drop below our entry position at 89,874, we will be in a loss, but it's not realized. It's only realized if we are getting liquidated, the loss. So we lose completely our $100 initial investment, which is worth right now $1,000 because we are on 10x, correct? Or if we are closing our position in a loss, how we can do it? We just move here to the right side, and then we are finding here take profit stop loss, so TPSL, and just you can click on add. And if we are saying, okay, if this is the take profit, where the take profit should be triggered, we can just put in, let's say at, I don't know, $90,100. Then we would be $2.70 in profits. If we are typing in, let's say we are at $95,000, then we would be at $61 in profits. But we can also set our stop loss. So in case we don't want to lose all our initial margin, so all our initial $100, we can just set the stop loss and say, okay, if the price is dropping 5% below our entry position. Our entry position was at 89,874. You just move it here to 5%. Then we're losing only $5 instead of all the $100. Let's move it to 20%. So in case the price drops 20% below our entry position, we would lose $21 from our $100 initial investment. It looks like this. Here we have our entry position. This is the entry line. Here down below, if we're zooming out, we have our stop loss. So in case the price will hit $88,000, we are getting stopped out and we are losing only this $20. But if we are deleting the stop loss, then we are getting, and we are reaching $81,000, then we will get liquidated exactly at $81,000. However, here we have our take profit, which we just set here at $95,000. So in case we're reaching $95,000, then we would make $60 profits as showed here before, $61 profits. So right now there are different strategies. As we see, the price is pumping, so going up, we are already $1.50 in profits, 1.3% in profits. We could just move our stop loss a little bit higher and say, okay, if we are high enough, and let's say we move it above our entry position, then we're getting stopped out of this position, but we don't lose any money because we are already in profits. So this is one of the techniques which a lot of traders using. They waiting until they in profits, they're moving their stop loss in profit, and if they're getting stopped out, they're still in profits. Okay, so what we can do, as we are $1.50 already in profits, we can just move our leverage and increasing it on 100x, for example. Don't do this at home, it's just to show you an example. And by increasing 100x, we are increasing our position, but getting our initial margin back. So we have our $100 which we initially invested, we have it back, and we have our stop loss moved above our entry position. So even if the price drops, we will stay in profits. No matter what, we will stay in profits. And now what we could do, we could just increase our position again by $100 on 100x. So $100 on 100x is $10,000. We just go long right now because we have nothing to lose at all. We are already in profits. So right now we see we have $100. We have a 100x position, which is $10,000 worth. As we added this $100, which we took out before because we increased to 100x from 10x, we got the margin back. We put this $100 back in the position on 100x, which means we are right now with 10,000 USDT worth in the market, even though our investment is only $100, but because multiplied by 100, it's $10,000 worth. But our liquidation price moved up to $89,000. So right now we have, in order to not lose the money, we have to move, because our entry position moved also up, we have to move again our stop loss above our entry position, so we are not ending up losing money. So either we're moving it up because we are right now already $18 in profit, or we move it slightly below our entry position. Then we will, if we're getting stopped out, we will exit with a small loss, or we move it above our entry position. So if we're getting right now stopped out of the market, we will still ending up with profits. So right now you see how quickly it's moving up, because we have right now a $10,000 position, even though we have only put $100. But in case the price drops only by 1%, we're getting liquidated. You see here, this is our entry point, 90,264, because we went on 100x and put another $100 in. And if the price drops by 1%, we are getting liquidated at $89,000. But this danger is over already for us, because we moved our stop loss. Here you see stop loss above our green entry position. And even if we're getting stopped out, we're not ending up losing money. So right now you see here we are $40 already in profits. We could move also our stop loss even higher here, let's say to 90,440. But again, a reminder, what I'm doing, this 100x, so taking out initial margin and going 100x, please be very careful with it. I mean, you can do this if your stop loss is above your entry position, but you have to be very careful if you take this initial margin and put it again back, because then your entry position moving up and probably your stop loss, which was initially above your entry position, would be, as you saw it right now, would be below your entry position. You're ending up losing the money which you put again in. So very careful here, and always use a small leverage. Right now, you see we are already $56 in profit, $50 in profit. So this looks amazing. We can move here our stop loss a little bit even higher. We are right now 50% in profit. So we put $100 in, we made $50 profits. If it would be $1,000, we would made $500 already profits. So this is amazing. We got stopped out, as you see it here, automatically. And if we are going right now on our profit and loss, we see our position was automatically exited at 90,540. This is exactly where our stop loss was above our entry, and we closed $20 in profit. So we made from $100 20% profits. So we went out of the market with $120. We put 100 in and made $20 profits. So this is amazing. Imagine it would be $1,000, we would have $200. Went in with $10,000, it would be probably $2,000 profits, which we would make, because we made 20% profits. Again, this is one of the strategies, and be very careful with 100x. You can use, in my opinion, only high leverage if your stop loss is already above your entry position, if you took out already your margin. But if you're adding the margin again, be careful, because your entry position, as explained and as showed in the video, moving above your entry position, and then you're ending up losing again your margin. So this was one of the strategies. Another strategy is if someone saying, okay, for me, $100 is not much money, and I'm willing to lose this $100, so I go straight forward with a high leverage with 25x, for example, which means $100 multiplied by 25, which is worth right now the position, if I jump in the market, $2,600. I jump in and I'm willing to lose this money. This is one strategy. Another one would be someone else saying $100 is a lot of money for me, and I want to play safe, and I go only on 2x leverage, which is pretty safe, because it means if the market drops by 50%, then you will liquidate it, only then. But also if you're using 2x leverage and you go in with, let's say, $135 initial investment, then it's only worth, multiplied by 2, $270. So only the double instead of if you go on 10x. But again, 10x is very dangerous, because if the price drops by 10%, you're ending up all this initial investment. So all this $135. So 2x is much safer. However, the upside is much less, because only $270 on 10x leverage. Again, if we are going on 10x leverage it's worth $1,350 already. But the risk is also more. So this is what you have to decide on yourself. So right now, I show you another strategy. So if somebody is saying, okay, I'm pretty confident, I made my technical analysis, I'm pretty confident the market will go up, and I will use a very high leverage. I will use, for example, let's say 35x leverage, and I'm putting in $100, and I go long. What happens? We see again our position, but the strategy is the following. I don't want to lose as much money, so I go here again on our stop loss, take profit stop loss, and I'm putting a very tight stop loss. I'm putting a stop loss if the market drops only, let's say, by 3%. It's a very tight stop loss. Here by 3%, I'm ending losing up only $2.90, so $3 around. I confirm it, and as you see, I have a very tight stop loss, but the upside is much higher, because let's say my price target for Bitcoin is $95,000. Then I have a very tight stop loss, so I'm not ending up losing a lot of money. So I went in with a very high leverage on 35x with $100, which is worth $3,500. So $100 multiplied by 35x is $3,500, but I have a very tight stop loss. So in case I'm getting stopped out, I'm losing only 5% of this $100. But in case the price is going up, as I made the technical analysis, for example, if you made your technical analysis and your research, then you're ending up winning potentially much more. And as you see here, the price is moving around our entry position. You see also our unrealized profit loss is moving from green and red back and forth, from losing and winning money, but it's not realized since the price is moving up and down. We not closed our position and we not got stopped out yet of our tight, very tight stop loss. We are trading right now 1 minute, so we have a very zoomed in price action. You see it's moving very fast. Each candle represents 1 minute, and you see now we touched our stop loss, so we lost our trade. We go again on the profit and loss. So we made today $20 profits in the previous trade, but we lost also $6.89. So today we made $14 profits, so 14% profits we made today. And as you see, as we had a very tight stop loss with very high leverage, we ended up with a big position, but we didn't lose a lot of money because we had a very tight stop loss. So this is another strategy. So there are two strategies. Either you are going with a very high leverage with a very tight stop loss, or you go with a very low leverage, but you're using much more initial investments. So instead of $100, I'm going into the market, for example, with $500, which is worth $1,000 then, but I'm getting liquidated on 2x only if the price drops by 50%. It's still dangerous, but less dangerous than on 35x. So this is what you have to find out for yourself, which strategy fits for you the best. And if you want, especially which is around the topic, different trading strategies, write me down below in the comments if a lot of people wishing a video on this topic. So I will do an in-depth video with different trading strategies. Feel free to use my affiliate link in the description. It's a win-win situation. You get access to this exclusive bonuses, which I showed you already, and it supports the channel, helping me making content like this. Earlier in the video, I spoke about cold wallets, and there are two options. For example, there are more options, but the market leader are Ledger and Trezor. And Ledger you get as cheap as $80. This is right now in dirham, but if you calculate it in dollar, it's around $70, $80. Trezor are, I think they're starting $169, but check out on the site. I will leave you the links to these two down below. So if you not day trade, just move them on your cold wallet and leave it there until you intend to sell it. Then you just send from your cold wallet to the exchange and sell it on the exchange. If you have any questions, just drop them in the comments. The community or I will help you. If there's a huge interest on a specific topic, I will do another video on this. Trade responsibly. Don't forget to like, subscribe, and hit the bell for more updates. And if you like this video, I kiss you and see you later. Mwah.